Level 1 analyst, you're 23, on the trading floor making $110,000 a year, and you're still poor. It's 5:47 a.m. You were here before the market opened. Not because anyone told you to be, because yesterday you saw your MD walk in at 5:30 and you decided you never wanted to be the one arriving after him. This is the 11th straight day you've gotten in before 6 a.m. No one has noticed. You keep doing it anyway. The salary is $110,000. That sounds massive until you subtract taxes, subtract the $3,800 a month studio in Manhattan, subtract the $94,000 in student loans, still accruing interest at 6.8% a year. After all of that, you have about $1,200 a month left to live on. You work 14 hours a day for $1,200 of real breathing room. You never tell your parents that because they think you've made it. They're not wrong, but they're not exactly right either. Your actual job is building Excel models and making sure not a single number is wrong. That sounds simple. It isn't. One wrong number in a $430 million pitch book isn't a typo. It's the kind of mistake that ends the career of the person who made it. And then one morning, you find one, a mistake in a senior associate's model, not a small one, a $2 million discrepancy in a single DCF line. You stare at it for 4 minutes. Do you report it? Do you quietly fix it? Do you say nothing? You silently correct it in your own version of the file, and you tell no one. This is the first lesson no business school will ever teach you. The system does not reward honesty, it rewards smoothness. There's a huge difference between those two things, and you learn it on a Tuesday morning at 7:23 a.m. with no one there to see it. You help move a $430 million deal from a computer screen on the 31st floor. You never meet the client, you never see the boardroom, but your numbers are in that room. And in that distance, you start to understand the geometry of this profession. You are the foundation, the part no one sees, the part no one acknowledges, the part that matters most. Level 2 associate, you're 26, sitting across from a CFO for the first time, and your hands don't shake. 2 years later, you're in the room. Not the main room, the room next to it, where associates sit and wait. But you're there, and that's the difference. The first time you sit across from a CFO, he's 52 years old with 25 years of experience, and he's lived through 3 recessions. You're 26, walking him through a covenant breach scenario and a $180 million leveraged buyout. He asks a hard question. You answer without shaking because you ran that exact scenario 40 times the week before. That's your currency at this level. Not intelligence, preparation. The deal itself is straightforward, a leveraged acquisition of a regional logistics company. After closing, there will be operational cuts. You don't model human cost. No one asks you to. You model EBITDA margins, debt service coverage, and fund-level IRR. You present it cleanly. The deal moves forward, you get your bonus. And you don't think about Ohio, where the company is headquartered, where 340 warehouse employees show up to work without knowing that a spreadsheet on the 31st floor of a Manhattan tower just helped decide their future. You rationalize it the way everyone at this level does. You're just running the numbers. The decision belongs to someone else. Numbers are neutral. But numbers are never neutral. You'll understand that later, when it's too late for the realization to disturb you in any meaningful way.
Level 3, Vice President. You're 30, making $480,000 a year, and learning how not to ask the wrong questions. Now you're originating deals, not just executing them, originating them. Clients call you directly now, not your MD, you. That sounds like progress, and it is. But it's also something else. For the first time, you start seeing the moral architecture of high finance with total clarity. And once you see it, you can't unsee it. All you can do is decide how to live with it. A typical deal at this level: acquisition financing for European infrastructure in Southeast Asia, $620 million. The target company's pension obligations will be restructured after the deal closes. The acquiring fund needs a 22% IRR. The pension restructuring is what makes the math work. You know what that means for the retirees on the other side of the transaction. You don't say it out loud. No one does. The deal closes in 11 weeks. Your year-end cut is $480,000. You wire $40,000 to your parents. You buy a two-bedroom apartment in a city where a two-bedroom apartment signals arrival. And you tell yourself the pension situation was already close to insolvent. You may be right. You may also just be telling yourself what you need to hear so you can keep going. The third rule at VP level is this. You no longer ask whether a deal is good. You ask whether it's executable. That sounds professional. In reality, it's how you learn to stop asking the first question without feeling like you've changed. Level 4, Managing Director. You're 38, and you lose a $2.8 billion deal because of a club membership. You manage $1.2 billion in advisory mandates, 3 closings in 4 years, no leaks, no missed deadlines. In this industry, that track record is worth more than intelligence. And then you lose a $2.8 billion deal. Not because your numbers were worse, not because your team was less prepared. Another MD at a competing firm plays golf with the client's chairman at a private club you're not a member of. That's it. A relationship built off the golf course decides who gets $28 million in advisory fees. You don't lose your temper. You don't complain. Within a month, you join 2 clubs. This is the part no MD job description will ever say out loud. Most of your work is no longer finance. It's relationship management dressed up as finance. You are selling confidence. You are selling certainty. You are selling the feeling that your client is the most important person in the room, even if you're pitching them on the same day as 3 other clients. You also begin to understand informational leverage differently. You know things other people don't know yet. Not insider trading, nothing illegal, just proximity. You know which company is running a strategic review before it's announced. You know which sovereign fund is quietly building a position. You don't trade on it, but you know. And knowing changes the way you move through a room. Real power isn't the ability to do something. It's the ability to know something first.
Level 5 partner, you are 44. A $4.3 billion deal and a handshake in a room that doesn't exist on the floor plan. There are 14 partners in the division. Now you're one of them. Carried interest, skin in every major deal. When the fund performs, you perform. When it doesn't, you don't. That changes the way you think in one very specific way. You stop optimizing for the annual bonus. You start optimizing for the 5-year fund cycle. And the difference isn't just time horizon, it's identity. You're no longer someone else's employee. You're an owner inside a machine. The biggest deal of your career, a $4.3 billion acquisition of an energy infrastructure company in Europe. 3 months of negotiations, 4 regulatory jurisdictions, 2 competing bids. Your consortium includes your fund, a Middle Eastern sovereign co-investor, and a Canadian pension fund. Closing dinner in London, a handshake in a room that doesn't appear on any floor plan in the building. The structure, an offshore holdco through a Luxembourg SPV feeding into a Cayman feeder fund. The tax efficiency is substantial, entirely legal, approved by 2 attorneys, one in Dublin, one in Singapore. You sign without hesitation. The deal adds 180 basis points to the fund's net IRR. Your carried interest from this single transaction will compound to more than $40 million. And here's what else is true about that same deal. Behind those numbers are 2,300 workers operating those infrastructure assets across 3 countries. They don't know ownership has changed. They don't know the new owners need to hit an IRR target that will require operational efficiency improvements in the first 18 months. Operational efficiency improvements. That's how you write it in the deck. By now, you've learned to write very, very well. You stop going to most social events, not because you're busy, because the conversations aren't useful anymore. Your social world narrows down to people who control capital. You call it networking. And sometimes, late at night, you wonder whether these are the only friends you have left. You don't stay with that thought very long. Level 6, the seat at the table, you're 52. You don't work for the bank anymore. You are the bank's relationship with the world. 2 calls this morning. The first is from a sovereign wealth fund in the Gulf. They have $7 billion they need to deploy. They want your fund to anchor the deal flow. You are one of 3 firms they're willing to give that mandate to. The second call is from a finance ministry, not the ministry's banker, the minister himself. He calls you directly. You take both calls from the same room. 44th floor, corner office, no trading screens, no Bloomberg terminal, just glass, silence, and a phone that connects you to people who move entire asset classes. You manage 12 client relationships. Each one is worth somewhere between $3 million and $40 million a year in fee revenue.
You don't work for the bank. You are the bank's relationship with those clients. If you leave, the relationship leaves with you. The bank knows that. You know that. No one says it out loud. That's negotiating leverage preserved through deliberate silence. Last week, you sat in an internal credit committee, a $900 million revolving credit facility. The balance sheet is deteriorating. Risk votes no. You vote yes. Not because the credit is clean, but because losing that relationship would cost 3 times the exposure. It is a political decision disguised as a financial one. At this level, every major decision is like that. You travel constantly: Singapore, Zurich, Abu Dhabi, Dubai. You have dinner with ministers, not politicians, ministers. These aren't business dinners, they're relationship maintenance. And relationship is the business. Capital doesn't follow returns alone, it follows trust between the right people in the right rooms. At some point, your identity has been quietly restructured around this machine. You don't notice it. No one does. Not at first. Level 7, the name without a title. You are 71, 47 years in, and a room in Geneva. There is no title under your name anymore. Senior advisor, chairman emeritus, family office. All technically true, none of them really describe what this is. You have stakes in 5 funds, 2 private banks, and a reinsurance vehicle registered in Bermuda. Total AUM is north of $90 billion. The exact number is known by 4 people. You are one of them. 3 central bank governors know you by your first name, not because you influence monetary policy in any official sense, but because information flows both ways. That's the distinction no textbook ever really explains. 2 years before anyone else sees it, you recognize that a currency block is heading into liquidity stress, so you structure accordingly, not to trigger the event, only to be on the right side of it when it arrives. And when it does, your funds gain. The press calls it prescient risk management. You don't correct them. You don't confirm it either. This is the cost no one prepares you for. The people you trust can be counted on your fingers. Fewer than 10. Outside that circle, there's no one. You have more access than almost anyone else in your life could possibly understand, and almost no one you can tell. The loneliness at this level isn't the loneliness ordinary people feel. Ordinary people are lonely because no one is there. You are lonely because too many people are there, and every one of them has a reason to be near you, and you've been in the game long enough to know exactly what that reason is. A boardroom in Geneva, 4 people, no agenda on the table, no presentation on the screen. You speak for about 6 minutes. The room listens to every word. You stop. The room begins to move. That isn't power. Power is when you make people do something. This is something else. This is when people move before you ask, because they've learned that your direction and the direction of capital are usually the same thing. It's colder than power and more permanent. Closing the circle never ends. Somewhere in a glass tower, a 23-year-old analyst has just opened his terminal for the first time on his first day. His badge says analyst first year. He looks at that badge and feels like it means something important. And it does, just not in the way he thinks. He thinks this system rewards what you put into it. Effort, intelligence, discipline. And that's partly true, but it isn't what the system rewards most. What the system really rewards is the ability to keep moving forward after you know things you cannot unknow. After you sit in those rooms, after you sign those documents, after you look at those numbers and choose not to look at what stands behind them. This is not a story about bad people. It's a story about ordinary, decent people, smart, hardworking, devoted to their families, laughing at parties, who step into a system large enough and old enough to have its own gravity. And gravity doesn't ask whether you agree with it. The terminal blinks, the market opens, the machine takes another step forward. It always does.